students, welcome to today's lecture on the course titled Entrepreneurship Development, EED126. Today we're going to look at the fourth topic known as the operation of simple stock keeping records. We want to look at the importance of receipts. Receipts is very important because it shows a history of financial transaction, both income and expenditure. It shows the number of goods bought and their rates and the total amount. So most times keeping purchase invoices, which are also called receipts, is an integral part of bookkeeping process. And in any business, a purchase invoice is a type of source document which is an evidence of transaction. It is important not to underestimate the importance of receipts. Keeping a history of transactions through receipts may seem tedious and unnecessary, but holding on to documents is very important because it can be used as a clue. Sometimes when you want to investigate fraud, you want to authenticate or validate claims, you use receipts to do that. So most times it is important to have a reliable bookkeeping, and the fundamental principle of reliable bookkeeping is that there should be no transaction without a receipt. This can minimize your taxable income, improve your chances of receiving a tax refund, and reduce the amount of time you need to spend on paperwork each year. The receipt can be defined as an umbrella term for different kind of source documents or electronic references that record transactions, including invoices, purchase invoices, notes payables, credit card slips, and salary rosters. The purpose of storing purchase invoices in this way is to document expenses and profits and record any changes in your materials. By documenting every receipt, a company's activities are made certifiable, transparent, and easily comprehensible, making it one of the most important aspects of company accounting. Another defining feature of receipts is the fact that in the increasingly digitalized arena of accountancy, they are a remnant of manual bookkeeping. These documents are physically issued, collected, stamped, and retained for future reference. But what is the most efficient way to legally manage all these documents? The article provides a rundown of most important things to know about bookkeeping and handling purchasing invoices. And so next we look at how to manage receipts and purchase invoices. Organizing your documents and references concerns everything surrounding the production, retention, and use of receipts. While commercial law does not prescribe a particular system for bookkeeping or regulating the organization of accounts in detail, there are nevertheless a number of legal requirements and important information to keep in mind for efficient bookkeeping. So when structuring your receipts or invoices or your transaction records, we don't have a standard or defined or law stipulating the format we need to use, but most times there are important things that are supposed to be contained in any valid receipt. So information contained in a purchase invoice is the next thing we want to look at. Receipts and other types of source documents can vary massively in their appearance. For example, a run-of-the-mill receipt from a grocery store looks completely different to a purchase invoice, and that will differ again from salary roster. However, there are 4 details that should appear on every kind of receipt. So we are trying to say that receipt can have variations depending on the purpose of the receipt. Is it for salary? Is it for purchases? Or it can vary from one organization to the other. But what is more important is that 4 things must be contained in any receipt, irrespective of whatever purpose that receipt is serving. And these things are: 1, text that describe the transaction. So that there should be a text describing what transaction went on, then amount, quantity, or value of any money or goods exchanged, then the date of transaction, the signature of authorization. So these are the 4 major ingredients we need: a text describing transaction, the amount, quantity, and value of any money or goods exchanged, then the date of transaction, signature of authorization, which may be omitted for electronically generated purchase invoices. So if a purchase invoice is issued digitally, it should include an authentic electronic signature, otherwise the receipt cannot be used to claim input tax credits. If in doubt, it is always possible to request an original receipt in paper. So most times, even when you have an electronic receipt, it requires a signature which must be signed electronically, or it can be manually signed on top of when you print out the digital receipts. So you can also, if you print it out in a paper form, you will need to endorse a signature on it. If a purchase invoice is being used for a tax deduction, further information may be required. For more information on this, we will look at purchases invoice for tax returns. Type of receipts. We want to look at type of receipts. A receipt is essentially written proof of any kind of transaction. Invoices are the most common type of receipts. These basically serve to document the demand for a fee or service. However, there is a wide variety of different type of receipts, each relating to a different kind of business transaction, both between a company and external agents and internal daily business within a company. That is why it is important to distinguish between internal financial statements and external financial statements. So we look at external financial statements. These include receipts obtained from external sources such as purchase invoices, bank statements, bill of lading, and commercial letters, expense reports, tax assessment, and commercial receipts. Internal financial statements, on the other hand, are handled internally within a company. So these are statements that are, or transactions that have been done or generated internally in a company or in a business enterprise. So example include wage and salary rosters, material withdrawal slips, transaction of outgoing invoices, copies of receipts, commercial letters, checks, etc., proof of cancellation and transfers. So where the document omitted from is the deciding factor in what constitutes an external financial statement. Where the document originated from is the deciding factor in what constitutes an external financial statement. And what is an internal financial statement? For example, with online banking system, even if the company prints out the statement itself, it is still an external document, as it was created and provided by an external party. Furthermore, an invoice sent by mail also counts as external document, even if it is printed independently. So we have external and internal documents. We've already stated what they mean. And for external documents, where it originates from is what is important. In addition to internal and external documents, another important type of receipt is the corrective invoice, which is used as a replacement document if it is necessary to reissue an invoice or a receipt. It is also possible to generate your own supporting document here. In order for them to be officially recognized, however, reissued receipts for large amount of money should be exceptions and must not occur too frequently in order for them to be credible. However, it is relatively common to verify small amount of change using reissued receipts. For example, tips, postage, parking fees, etc. A reissued receipts are handled internally within a company. They do not count as an internal document, but they have a special status as a third type of receipt. So we have talked about externally generated receipts, internal documents, external documents, and we've talked about reissued in a situation where there is omission or we want to account for what was not provided in the other type of documents. We can do that via a reissued receipt, and we've said that most times it should not be issued often so that it is seen as credible. So most times we find them in tips, postages, parking fees, etc. So the next thing we want to look at is how to record transaction when bookkeeping. How exactly does one make an original entry of transaction? After collecting all these receipts, how should you file them and keep them ordered? There are some fundamental rules to good bookkeeping to which every business must adhere. The first rule relates to the timing of the entry. In principle, any transaction should be documented in a timely manner. As a rule, all business transactions and accompanying documents should be transferred to your accounting journal by the end of the month. So, furthermore, you should take care of documents, all of your receipts without. You should take care to document all your receipts without leaving any gaps. This means storing documents chronologically and comprehensively with consecutive information. It is important that outsiders can clearly assign each receipt to a specific business transaction. Accounting stamps are an ideal way to take care of legibility, as this provides the most important information at once. This makes it substantially easier to file a document correctly at the end of the month. So, how to record, store, and break up your receipts. Expenses are great. Whether you are a sole trader or a limited liability company, you can claim back your allowable expenses and reduce your company profit, meaning less tax to pay on them. It literally pays to claim all your expenses. But with great power comes with responsibility. There are various rules set out by the HMRC around what you can claim as a sole trader business expenses or limited company business expenses. How to claim it, how to store your record once you have claimed it, and in order to take advantage of expense tax paying reducing goodness, you must follow the rules. So people are often caught out by the last rule, proper storage of expense record. They claim and the receipt goes in the bin. Chalking out your receipt could land you in hot water. So what are your obligations when storing your expense records, and what happens if you don't adhere to it? How long do you have to keep expense receipts? Most times 6 years, 72 long months. The self-employed sole traders have it slightly easier, just about 5 years. The lengthy period is for the HMRC benefits rather than yours. So most times you see that you can store your receipts, you can store it for 6 years or 5 to 6 years. Recording all your expenses. It is a good habit to use a spreadsheet to keep track of all your expenses. The common one is like a Excel spreadsheet, which can be used to enter all your record. How to store records. As anyone who has ever held a rare session ticket, so most times you can store your records using different materials. Most records can be scanned and kept electronically on a computer or a storage device such as CD or memory stick. It is also important to make sure you scan the reverse side of any receipt that also has information on it. Many shops print double-sided receipts. There are a few exceptions to the electronic storage rule. So, it is important to keep the original documents, which shows you have had tax deducted. For example, if you are an employee, your P60 form from your employer, which shows your pay and tax information for the tax year. It is also worth noting that scan does not necessarily mean you need to invest in a scanner. As long as all this information is legible, a photo from your smartphone is perfectly accepted. If you would like a more detailed rundown of how to keep record, you can check out apps to back your receipts. Keeping secure digital records of your expense receipts is a piece of cake with the right kit. There are several apps you can use to scan, analyze, and back your receipts. Examples include the Google Drive, the Dropbox, Receipt Bank. These are different apps that can be used to store. Then we have apps to record your business mileage expenses. So if you want to show the progress of your expenses, business mileage expenses are slightly different to other expense types in that they often won't be a paper record. There often won't be a paper record. The journal took place. the journey took place. Petrol is bought in bulk, and only evidence you rode a bike to a meeting will be your toned. So example of this are trade card capture, mileage spreadsheets. So viewers, this is where we come to the end of today's lecture on the fourth topic, which we titled Operation of Simple Stock Keeping Records. We look at the importance of a good bookkeeping. We talk about how to manage receipts and purchase invoices. We talk about how to record transactions when bookkeeping. Then we went ahead to look at how to store records and apps to back up your receipts. And finally, we looked at apps to record your business mileage expenses. So if you're yet to subscribe to our channel, do so by hitting the subscribe button. Turn on the notification icon so that you can receive updates whenever we post new videos. For now, being with us.